Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Good afternoon, Vivek. Some recovery from the low, so it's been a little volatile in the last couple of hours. Midcaps continue to be under pressure, and we do have a lot of earnings. We'll discuss that through the course of the day.
That's right. Good afternoon, Sonal. Like you mentioned, very volatile trading session, very stock-specific trading session, and like you mentioned, a lot lined up on the show. So let's start off with the top headlines. Mixed signals on the India-US trade deal, cloud sentiment as the cues from corporate earnings, keeping stocks in check. Realty and healthcare are the big drags, while metal, financials, and IT eke out some gains.
Tilaknagar Industries, the stock gains for the second day. Sources tell CNBC-TV18 that the company is the leading contender to buy Pernod Ricard brand Imperial Blue for a deal worth nearly 4,000 crore rupees.
AGI Greenpack shares surge over 11% in trade following its Q1 earnings. Top line grows 21% on a year-on-year basis, while profit surges 40% during the quarter.
Vardhman Textiles Q1 net profit declines 13% on a YY basis. Margins also contract to 13.7% versus 15% a year ago. The stock falls nearly 3% intraday post-results.
Blue Jet Healthcare tanks 10% in trade, reacting to its Q1 results as margin narrows by over 7% sequentially, even as on a year-on-year basis, numbers appear higher.
Those are the top headlines for the markets. The headline index absolutely flat with some negative bias right now. Do remember we were down around 40 points at a point in time. We did see recovery from there, but then again, the Nifty slipped into the red. Mid-caps, though, that index is the one which is underperforming today. We have a 240-point cut thereby. There's been no recovery in the mid-cap index. It's not in line with the benchmarks right now. The Bank Nifty too down in trade. We did see that major move yesterday coming in from the private banking names, be it ICICI Bank or HDFC Bank. But today, the PSU banks, those are putting some pressure in the banking space currently. But overall, it remains a very stock-specific market. Too many earnings, too many conversations happening today.
Too many conversations, a lot of management saying very important things. A lot of stocks, despite weak earnings, have actually recovered. Names like Havells, that particular stock has recovered. Colgate too, numbers were a miss. But again, the management commentary for H2 is something that seems quite positive. That stock too recovered after the brief dip it witnessed post the results. But this is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us to the mid-caps that are moving around in this session.
Choppy benchmarks, but you can't say the same for the broader markets because they continue to remain at the lows of the day. We'll start off with the losers then from the broader markets. In 361 WAM, of course, the block deal that it saw in the morning is still 6% lower. At the lowest point of the day are Aarti Industries and Dreamfolks. And look at the fall you've seen in CMS Infosystems. At the second half of the session has just been a one-way vertical fall for the stock, 4% lower there as well. The earnings reactions, a lot of them have come up just in a few minutes. And look at Blue Jet Healthcare, as you just mentioned, 10% lower, and take a look at the slides in Kirloskar Pneumatic. Numbers were here just a few minutes earlier. Vardhman Textiles too at the lows of the day, and Parag Milk, of course, is a result reaction, 4% lower on that stock as well. Another segment that's sulking today is pharma. Most of the stocks on the Nifty Pharma Index are trading lower and near the lows of the day. Granules, Aurobindo, Gland, all trading with losses of between 2 to 3%. Among stocks that are bucking the trend today and on good volumes at that, you take a look at RHI Magnesita, 7% higher. India Cements down yesterday, but now up 6% in today's session. And of course, in response to Eternal's moves, Swiggy at one point was up 8%, is off those highs, but still trading 4% higher. And NLC India now has moved to the highs of the day, 5% higher on very strong volumes. And lastly, a pocket that is doing well, though, after Ultratech's results. Although Ultratech is down, most of the other cement names are doing well. Take a look at Dalmia Bharat, Shree Cement, Ramco Cements, all of them at the highs of the day, gains of anywhere between 2.5% to 3.5%. Back to you guys.
Okay, all right. Those are some pockets and individual names which are doing really well. Thank you so much, Hormuz, for joining us in as always. Let's welcome Shrikant Chauhan from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Thank you so much for joining in. What's the next important trade on the Nifty? Will it continue to be volatile like this? Or what are the charts suggesting now?
Yeah. Good afternoon, Sonal. Good afternoon, Vivek and everyone. Well, for Nifty, it is finding difficulties to sustain at higher levels. But at the same time, we cannot forget that the markets have fallen to their extreme levels, close to 24,900, 850. So I'm of the view that it is going to consolidate for at least next 1 or 2 days more. and later on we may see upward side activity in the market. But broadly, I'm of the view that the market has completed its correction at 24,900, 850. Maybe the market retest these levels again, but overall, I'm of the view that the market has completed its downward activity and is ready to pull back towards 25,300 or 350 sort of levels in the near term. And overall, the trend of the market is in the range of 24,500 and 25,500. So it's a range bound sort of market. But ideal strategy should be to buy on dips. Today, Bank Nifty is not participating, and maybe because of that, the market is not moving upward.
Srikanth, what are your individual trades for the day?
Yeah, Vivek. See, today all these commodities, they are doing really well, and most of these commodities are from the mid-size basket companies. There we are seeing good amount of buying interest. Especially we like GMDC, which is around 457, 460 sort of level. It has crossed its resistance level at 440 with huge volumes, and today we are seeing follow-up activity. So while looking at its overall entire technical pattern, I'm of the view that the stock is heading for at least 500, 530 sort of levels, which will take some time, but it's a positional buy at current levels. The other stock which we like, on which you also discuss, is Ramco Cement. There also we are bullish, and on long-term charts, I mean to say on monthly and weekly charts, if we go through with its technical pattern, then it is forming some very large triangle sort of formation, and it is already above the upper trading range of it. So based on its technical formation, the next level to watch out for would be maybe 1400, 1450, which will take, like I'm going to say, it will take some time, but eventually the stock is heading for those levels. So there also we are bullish, and in last 5 days, if we see the overall setup of the market, then we are seeing good amount of buying interest in cement companies. So broadly, we are bullish on Ramco Cement also.
Okay, all right. So the cement space actually is doing really well today. Thank you so much, Srikanth, for joining in with those picks and individual names. Time for a break now. When we come back, we'll talk about some stock-specific action and the market moves as well. Stay tuned. Welcome back. You're still tuned into Mid-Cap Radar. Let's talk about some mid-caps which are moving around. India Cements, for instance, is up 5.5% right now. The entire cement pack is actually buzzing. The mid-caps do under a lot of pressure. We do have Info Edge as well. We've been talking about that stock through the course of the day. Eternal's results, Info Edge holding that stake in Eternal. Paytm is the one which is up 3%, reports numbers soon. So we will watch out for the profit and profitability commentary that will come by from the management as well. But you know, Tilak Nagar is one stock which continues to be in focus. There is a story brewing there. Sources tell CNBC-TV18 it's in a leading race to buy an interesting brand. Nigel is joining us now with all those details.
Well, that's right, Sonal. You know, it appears that Tilak Nagar Industries is setting themselves up for a stiff whiskey peg. I say that because they could probably be in the forefront to acquire Imperial Blue from Pernod Ricard. Let's explain to you a few details. What we pick up is that the deal size could be roughly around 4,000 crores approximately, and you'll be wondering how will they fund it. I understand that it could be a mix of debt as well as equity, and they've already disclosed on the exchanges that tomorrow they'll be meeting to raise some money. So in all probability, the money that they're raising is to fund this particular acquisition. But the breakup of this 4,000 crores is something that will be eyed between debt as well as equity. They're net cash company. They have more than 100 crores of cash. So, they're not too leveraged as of now, but we'll have to see how the leverage moves up. The street could view this positively because of a few factors. Currently, Tilak Nagar Industries is only into brandy. Now, if they acquire Imperial Blue, they'll get some whiskey. Currently, they're only into South India. If they acquire this asset, they go pan-India as well. And the scale will be tremendous because as of the last year, they sold only 12 million cases, little less than that. Imperial Blue does roughly around 22 million cases or thereabouts. So put it together, they'll go to nearly around 34 million cases or so. Scale will come about, pan-India presence and diversification. We'll wait by to hear with regard to the contours of the deal as well as the funding plan out there. But for the time being, the stock is quite excited. Though if you look at it from year to date, actually, the stock is more or less flattish. Last 1 month, it's seen a big run. Back to you.
Well, all eyes on Tilak Nagar Industries, post-fundraising and whether this particular news break does fructify. Well, moving on, Ria joins in. AGI Greenpack has delivered its numbers. That particular stock is doing very well. Ria joins in with all the fine print.
That's right, Vivek. AGI Greenpack has reported its Q1 FY26 numbers yesterday. Now, in terms of the revenue, that has seen an increase of over 21% compared to the previous year. Even the EBITDA and the net profit have jumped up by approximately 20% and 40% respectively compared on a year-on-year basis, although the margins have fallen by around 37 basis points. But the company has also diversified into the manufacturing of aluminum beverage cans, and the company is going to build a new facility in Uttar Pradesh for this. They are expecting to produce 1.6 billion cans per year once the entire facility is completed. In phase 1, they are going to add around 950 million cans, which is planned to start by Q3 of FY28. And in phase 2, that will be implemented by March of 2030. Now, the total capex for this project is rupees 1,000 crores, 850 crores to be done in the first phase and the balance to be done in the second phase. And this will be funded by a mix of debt and internal accruals by the company. The management has also commented on this, saying that they have entered the segment with a very clear target of becoming the top player in this segment within the next 1 decade. At the end of Q4 of FY25, the management had also said that they are targeting a revenue growth of around 8 to 10% for FY26, and EBITDA margins will remain in the range of 22 to 25%. But on the back of this positive development and good numbers in this quarter, the stock was up over 15% at one point in the session and still holding on to very strong gains.
Oh yes, 14% higher on AGI Greenpack. Thank you, Ria, for joining in. By the way, Mahanagar Gas's number are there at the bottom of your screen, and it looks like a complete beat, especially on the margin front. The stock has spiked to the day's high. Net profit is higher. On a quarter-on-quarter basis, of course, it's higher by 29%, but it has come in at 324 crore rupees, which compares with the 268 crore rupee poll that we were working with. It is actually a beat which is led by pricing hikes and the spot LNG prices that saw a cut this time around, because volumes, they are absolutely in line with estimates. So volumes have come in at 4.22 MMSCMD, which was the poll as well at 4.2 MMSCMD. That's an increase of 9% on a YY basis. It is flattish on a sequential basis. If we see the CNG volumes, those are up 8% on a YY basis. The PNG domestic volumes are up 4% on a YY basis and 4% on a sequential basis as well. So it is in line when it comes to volumes. But if we look at the revenues, it's higher than the poll, the EBITDA higher than the poll, margins 300 basis points higher than the poll as well, and that is why the stock has spiked. It's a good set that has come by. If we look at the internals as well, even though other expenses have come off, that is one of the reasons for the margin improvement that has come by. Profits are higher, of course. The other expenses have seen a sharper fall, and that's the reason why we are seeing that cost reduction has led to an EBITDA improvement. And if we talk about cost of material consumed as well, right, we were talking about APM gas allocation coming down, which would have increased their cost of materials, right, but it is flat on a quarter-on-quarter basis. That means the imported LNG prices that had come down, that helped Mahanagar Gas this time around. Very interesting to watch out the impact on other companies as well, be it the likes of IGL, be it the likes of Gujarat Gas as well, because if it has helped Mahanagar Gas, it would have helped IGL and Gujarat Gas as well. If we can show the stock price of IGL right now, yes,
IGL too near the day's high.
So it should, because if it is helping something like on Mahanagar Gas, it should help something like an IGL as well, because IGL and MGL mostly have the same sourcing mix, more towards CNG, while Gujarat Gas has more sourcing of spot LNG. And since spot LNG prices had come off, it would help Gujarat Gas as well. So good set of numbers coming in from Mahanagar Gas. It's a top-down beat. Major beat has come in, of course, on the margins. It is led by the price hike that the company took in the month of April, and also because of spot LNG prices coming off. So clearly the concerns around APM gas allocation coming off did not deter the company. Cost controls and also price hikes, something helped the margins for the company, because it's not a volume-led growth again. It is a margin-led growth for the company this time.
Thank you so much, Sonal, for detailing those numbers so quickly for us. All three of the city gas distribution companies near the day's highest point. But with that, we'll slip into a short break. We'll be joined by the management of Bansal Wire Industries to discuss their Q1 results on the other side. Welcome back to Mid-Cap Radar. Well, as Sonal just highlighted, the results of CGDs, MGL, IGL, those are the stocks in focus, continue to remain in focus. But we have a very important management. Bansal Wire Industries is in focus. This on the back of its strong Q1 earnings. The company saw revenue surge almost 15%, while EBITDA grew 17%. To discuss the quarter gone by and the way forward for the company, we are joined by Pranav Bansal, MD and CEO, Bansal Wire Industries. Thank you so much, Pranav, for joining us. We'll keep this particular interaction slightly shorter than the last time around, with the midst of a heavy earning season. Number one, last time you spoke to us around a fortnight ago, you had mentioned that a 25 to 30% volume growth is what you're targeting for FY26. Do you continue to stick to that particular target? Any tweaks to your FY26 guidance?
Sure. So our target still remains the same. 30% is the volume growth that we are expecting this whole year. And the first quarter has also gone as per expectation. So I see no reason why we would not be able to do 30%.
Okay, so 25 to 30% growth is something that you will be maintaining. What was the EBITDA per ton in quarter one of FY26 and what was value-added products as a percentage of sales this time around?
So EBITDA per ton was about 7,200 rupees. As per our guidance of 6.5 rupees, we were better off at 7,200. Value-added products still accounted for about 30% of our products.
Okay, so when you are saying that quarter one saw EBITDA per ton of 7,200 rupees versus a guidance of 6,500, do you think you'll scale up your guidance in that case?
So we still have 3 quarters to go, and our target for this year and next year is again to grab market share. Therefore, it is better if we remain with the 6.5 kind of a rupee margin, because it is a very dynamic world that we are living in, and that's the focus.
So 6,500 rupees per ton is the EBITDA per ton guidance that you have given for FY26. So that is something that you're maintaining. Is that right?
Yes.
Okay, FY26, what is the capex that you have lined up and what is the typical asset turnover? So end of FY26, end of FY27, what is the kind of revenue run rate we can see?
So 26-27, we have taken 600 crores of capex that we will be doing. Majority of this will be backward integration in the Gujarat facility for a 1.8 lakh ton steel plant. And along with that, we are also putting a 60,000 ton wire facility. So this is where majority of the capex will go. This will start coming on stream by the end of 27.
Okay, Pranav, end of FY24, market share was close to 6 to 7%. FY25 end to, I believe you were along a similar run rate. Q1, where do you stand in terms of market share? And with the capex planned, what is the kind of market share that you expect to garner at the end of FY26?
So I think looking at our Q1 numbers, we are already at about 7.2 kind of a market. Okay. And our expectation is, of course, to scale further.
Okay, could you quantify what is it that you expect to scale to?
We want to grow at, as a company, we've grown at 20-25%. So this is the target for the coming years also. This year, we've taken a target of 30%. Next year should also be in a similar kind of a range. So once we are able to reach these kind of numbers, we are looking at a 10% kind of a market share in a very short while.
Okay. What about the capex which is lined up? When do you reach that 100% capacity utilization level? What kind of asset turnover are you looking at from the new capex that would come by?
So, for example, the current facility that we've just put in, the Dadri facility, we are looking at majority ramp-up happening within this year. Some crossing over to maybe next year, first quarter or something like that. And then we are also adding capacities as and when required. Apart from that, the Sanand facility will start operation within FY27, and majority of capacity utilization will also happen within FY28.
Understood that. So capacity utilization at the end of Q1 was at close to 74%. In your industry, does that give you enough headroom for growth? And with the kind of on-stream that you will have at the end of the capex plan, what is the kind of capacity utilization trend that you envisage?
Sure. So in the industry, this is the kind of capacity utilization trend that is being maintained. But for Bansal Wire Industries, we generally have been maintaining about 85 to 90% kind of a capacity utilization historically, which is what we would want to target even today. So we have enough headroom for us to grow within this year, but we will also keep on adding capacities and utilizing them as and when required.
Understood. Pranav, most of the capacity that you've planned, you have pretty significant plans. How are you proposing to fund this? What is the current debt level? What is the current debt to EBITDA? And are you comfortable with these debt levels? And what will be the plan going forward, especially on the balance sheet?
Sure. So debt to equity has remained at about 1.71 historically. Now we are already down to 0.5. So we are at a very comfortable position when we talk about leveraging our balance sheet. Apart from that, what is also important here to understand is in this year and next year, our target has been to generate a lot of free cash. Even the first quarter itself, we've generated 100 crores of operating cash flow, and which should only increase each and every quarter. Therefore, we are trying to fund most of our capacity expansion through internal accruals.
So most of the capacity expansion will be done via internal accruals. 25 to 30% volume growth is what you've targeted for FY26. Thank you so much, Pranav, for joining us, and wish you all the best for the remainder of FY26. Well, a quick market check. A lot of the stocks have actually recovered quite sharply from the day's lowest point. HDFC Life is one particular stock. That stock is near the day's highest point. And Havells, that stock has seen a significant surge, up almost 3% now. But with that, it's all the time we have on this edition of Mid Cap Radar. Mutual Fund Corner when we return.